What has happened to crypto? Everybody expected Bitcoin to hit 1 million, maybe even 10 million per coin. We all drank Michael Saylor's Kool-Aid, but yet here we are. It seems like money has flown somewhere else. Because here's the thing, there is a strong correlation between asset price returns and the attention on that asset. As in, if there's more people interested in something, we tend to see rising prices. Now, unfortunately, the interest in crypto is going down further and further, and it's getting replaced by something else. Have a look at this data over here. This is the number of search queries for Bitcoin and for crypto over time over the last 5 years. There are more searches for Bitcoin than for crypto, but we can clearly see that after the peak in May of 2021, interest started to rather fade. Now, where did the attention go? The answer is partially artificial intelligence. Since the beginning of 2023, AI-related searches have grown much faster than Bitcoin or crypto-related searches. Or have a look at this. In green, we see now the number of searches for gold over time. That also went up recently quite a bit. Here is the return of Bitcoin relative to Nvidia. Since the beginning of 2021, Bitcoin underperformed Nvidia by almost 90%. And so this is where a lot of the risk on capital went, right? There is correlation between Bitcoin and Nvidia stock. They both go up and down at the same time, but there is capital rotation happening as well. And some people that are taking profit in Bitcoin might have put this into technology stocks, for example, Nvidia. Here's a more broad market comparison. This is Bitcoin relative to the Nasdaq 100. There was no outperformance at all in the last 5 years. There was very little outperformance in the last 8 years. So yes, Bitcoin did slightly better than technology stocks, but we also had 2 massive market corrections during that period. So is this additional risk really worth the slight outperformance? And are we even going to see a long-term outperformance here? Here's Bitcoin relative to gold. Bitcoin is seen as gold 2.0, as a potential replacement for gold, as the hardest of the assets. The issue though is that Bitcoin trades like a technology stock. As in, there is a lot of correlation between tech and Bitcoin. There isn't as much correlation between gold and Bitcoin. And so when people want to get risk off, when people expect the AI bubble to burst, then maybe they're buying more gold. They're not buying more Bitcoin. And so there was again zero outperformance in the last 5 years of Bitcoin versus gold. But gold has the added benefit of being actually a portfolio diversifier. Have a look at this chart. This comes from Ben Cohen's Into the Cryptoverse. It shows the number of new YouTube subscribers for crypto-related channels. There was a lot of attention when Bitcoin hit the 60 to 70K mark. A lot of new people entered the space, were wondering, should I buy now into that rally? Then of course, naturally, as we enter a bear market, there is way less attention. But here's the thing, we went all the way from 16K to above 100K, yet the attention, or the number of new YouTube subscribers, that didn't grow that much. The views on YouTube channels are still relatively robust, but the number of new subscribers is not. In other words, there's just the people that are sticking around, that are already invested, that are wondering, how should the market be timed? When should we buy? When should we sell? But there's really no new support by an expanding investor base. By the way, if you're enjoying this video so far, then feel free to give it a like. It will help to spread the word. It will tell the algorithm to show the video to more people. Thank you very much. The same trends can be observed on Twitter. So here's the number of new Twitter followers. Again, there was a massive surge in 2021, and now the market has slowed down. The interest has slowed down a lot, while the number of tweets did not necessarily go down. And so fundamentally, if we want a price to go up from here, we have to ask ourselves, who is the marginal buyer? Who is going to buy at the current prices if no new people enter the space? Now, the obvious answer that most people give is, it's Wall Street, it's the treasury companies, it's the ETFs. But how robust is that demand and how constant is that demand? Have a look at this chart here. This is the balance of Bitcoin that's held by various Bitcoin treasury companies, with Michael Saylor's strategy having the bulk of the BTC. The purchases have slowed down recently. Have a look at this line in purple. That's the balance on the ETFs. Again, it tends to go up, but it has slowed down recently. The problem really is that companies like MicroStrategy are forced to buy when the price is rather high, because MicroStrategy uses Bitcoin as collateral to buy more Bitcoin. So when the Bitcoin price depresses by 60–70%, then the collateral isn't worth that much. And then it's hard to buy more. So really, MicroStrategy is forced to buy high. And they cannot buy the dip. They are not the ones that stop a bear market. They're simply just providers of liquidity for the people that want to exit after a bull market. And so really, who's the marginal buyer? It's not going to be MicroStrategy. But I do know who the marginal seller is. And the problem is that the marginal selling is way larger compared to the marginal buying. And that's why prices go down. In blue, we see the long-term holder spending. So long-term holders tend to take profit whenever we rally. And once they sell aggressively enough, the price can't go higher anymore. They also tended to buy the bottoms. But since we hit 100K or so in Bitcoin, the long-term holders are constantly selling. And they're selling much more than the ETFs are buying. The ETF purchases is the area in green, and the long-term holder purchases, or should I rather say the recent spending, that's the area in blue. So really, the long-term holders dictate where the market is going. And the only way how this can turn around is if the long-term holders start buying the dip again, as they did in August and September of last year. The selling is slowing down somewhat, but we are still in a phase of distribution. Only when this flips, I believe, does it make sense to get exposure to the risk again. The retail investor isn't interested in buying the dip. Wall Street has already purchased and can't buy for lower prices either, at least not at a sufficient scale. And so it all depends on what the long-term holders are doing now. Are they going to continue to take profit? Do they see this as a long-term shift towards other more attractive assets where Bitcoin, relatively speaking, is losing out and can't outperform anymore, especially when we consider the volatility? Or is this just market timing, and are we going to see a change of heart? Feel free to search for this title here, comparing the scale of ETFs, capital inflows and LTH spending on checkonchain.com. So that's here in the background. That's where you can get access to this chart. The entire chart has a bit more information, but really the most important of the data points are just long-term holder spending and ETF acquisitions. If it's your first time here, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. It helps the channel grow. Feel free to also check out the premium member. This is where I share what I currently do in this market. This is where I share my portfolio. The link to premium pops up directly here on the screen. See you next time on premium, or see you in YouTube. Cheers.